All right, folks, welcome to a market recap. Today, I was looking for longs. I did not have any setup. I did have a setup, but the setup was in premium. If I have any setup that's in premium, I'm not going to take that setup. If it's a long setup, if it's in discount, I will definitely take it, but it was in premium, so I did not execute it. So today, even Romeo today Romeo was bearish. He took the sell right on this top of this candle. He took that, 10 to 3 sell. Romeo was short, I was long. What does that mean? Does that mean that you do, like, if your mentor is bullish or bearish, but you are against this bias, you have your own perspective? Are you doing something wrong when that happens? You're not, because everybody has their own brain, everybody thinks differently, right? But you could build up a bearish narrative, you could build up a bullish narrative, right? Everybody has their own brain. So if you have the same, if you have a different bias than your mentor, don't think I'm doing something wrong, because everybody has their own perspective. Now today, there's a lesson today as well. There's a big lesson today. It's that, like, we have to mark out the daily range, because daily ranges are a big problem. And do you guys remember, like, through me using my brain alone? We go back and chart when we had this setup, right? Our first Monday setup, which was all the way back here. The Monday setup that we had all over here, which was on a long position, which got stopped out because we bought in premium, right? There was a daily range here. Market should at a low, soup at a high, stable low, and a stable high. When we bought around here. What we bought was in premium. So the market came back down, then eventually went up higher. So, oh, wrong one. So where we bought in premium. So you can't buy in premium. The general thumb is only buy in discount, only sell in premium, only buy in premium once discount gets tapped, only sell in discount once the premium gets tapped, because that's a rule I've had for a long time. And today that rule played a role, right? And that rule, I didn't even have it in my notes, right? I didn't have it in my notes. So that rule is subconsciously in my mind, that, constantly remind me if it comes in a scenario. That's why I didn't take this trade today. I didn't have a long setup. I had a non-decision move, but that setup was my long, but I didn't take it because my rule says never buy in premium, never sell in discount, only buy in premium once it gets tapped. If I have an entry in premium, but my discount area hasn't been tapped, and if my entry is on premium and a portion of my entry or to my stop loss is in discount, I cannot take it, because a portion of it is in premium. I cannot take it, right? And vice versa. If I was a bearish bias, and if I had a bearish bias, right? So that's the overall lesson for the day. But the reason why we bearish is overall in a higher time frame. Weekly was overall bearish. We had a weekly seated downside, right? Weekly ERL back to weekly IRL, as well as a weekly seated downside. And we're in the third quarter. We're in the third quarter of the year, so this I'll probably highly likely see some sort of pullback for the third quarter of the year. I will definitely see that happening. And I'm wondering, well, like, man, like, as you said, that weekly IRL to ERL, he has been delivering. He has been delivering, right? A weekly ERL, the IRL got tapped, right? Because of SMT. Now go from IRL back to ERL, right? So the weekly IRL to ERL is still in play, right? We can't figure out the weekly time frame. It's still in play, but the reason why I didn't go down here was because of SMT. They have a quality pair. So do not forget that, like, but one day, well, a lot of you guys think market will constantly just go up higher and higher and higher, right? Although a target overall that general is up and upside, but short-term basis we trade in 15-minute time frame. So that thing is fucking useless until we get near it, which we're not near it. So over here, you guys constantly think market go up higher and higher, and you guys don't see it, which is gonna happen. It will happen, right? You could pick the top, you could pick the bottom. How do you frame the top? Use CRT. How to trade the top to the bottom? Use total soup inside the CRT. Simple as that, right? And this is all by himself, Romeo. Shout out to him. Credit all the credit goes to Romeo and ICT. Right? All the credits I have, everything I'm saying is based on their knowledge. I do have my own stuff, right? All my own knowledge is through me, my own experience, but majority goes to him because the new things I'm discovering is already out there. It's just that I didn't pay attention to the notes when they told me to pay attention to, so I had to find out myself. So shout out to them. So, keep in mind, you could definitely pick the tops and pick the bottoms. And probably a lot of you guys wondering, well, like, market's in a bull ass trend. Why do you want to sell? This could happen, right? This is why you guys gotta stop pattern trading. If you see a bull market happen, but there's a context and draw telling that's bearish, you have to be bearish, right? In this day, we don't have no context to be bearish. We did have some sort of context, but it wasn't really strong enough or have way more stronger bullish bias, which that's what they had no setup. And you keep it in mind. Like, you could trade reversals, right? You could predict reversals through using CRT, the market narrative, market context narrative. You could determine reversals. Don't just think market is gonna go one side. Market just can't go one side. It's to go reverse. Market has expansions, reversals, retracements, consolidation, expansion. So trend, range, trend. So when we're trending, we could reverse. So basically doing a retracement / reversal. So we can do another semi-trend to the downside and eventually do some consolidation, retracement, eventually do another trend to the downside. So trend, consolidation, which is basically retracement, another trend, they go right back down, right? So simple as that. You could definitely trade reversals. You can pick reversals. It's easy. So all you gotta know is the context and narrative, the drawn located, that's it. And the drawn located must be in the daily time frame above. So on the daily time frame today, we are a bullish overall. Tomorrow, I'm looking for this daily fair value gap to getting tapped, so we can go from a daily IRL to ARL. That's why I said today, the reason why I feel like Romeo went to the downside was because of this daily ERL back to this daily IRL, right? But in my eyes, there was an SMT with this IRL right over here. This scan right over here had SMT with the IRL. So I was like, IRL. So we already went from an ERL to IRL, right? We already went from an ERL back to this IRL. This IRL had SMT. So I thought, okay, there's no more ERL here. So I'm going to go up higher until the market makes a bearish candle. Or it looks like today is going to be the bearish candle day. Then eventually go from a daily IRL from here back to ERL. And eventually from there, go back to IRL to the downside and reverse or something like that. That right there, I don't know if that will happen until I see it, until I see context and narrative to it. But my higher time bounce was overall bullish. If the principle was, if we close above the previous daily candle, we're going to expect higher prices. So if we close above this daily candle, we're going to be expecting higher prices, which we did. Now, as well as we had a classic expression profile to the upside, Monday low of the week. The lower time frame for the market constant narrative. At the moment when I was trading, I didn't pay attention to the 4-hour time frame, which that was the lesson I'm going to talk about. For my market constant narrative, we had a bullish order flow. Yep, we had a needle continuation and / reversal because there was SMT, as well as we had a 4-hour kilos fair value gap, and that's all we had. We had no ranges, but that. So. And I did say there was a daily range. I did say there was a daily range, but during that time when I was trading, which is the candle was all over here, which this 5 AM candle didn't print that time, I was like, there is a daily range because market stood at a low, stood at a high. Market made a stable low, but the market hasn't made a stable high yet. So I don't know if the daily range yet. I said, I don't know if there's a daily range yet. So for my context, there was no daily range, right? But after the 5 AM candle closed, now there's a daily range. So now you don't want to buy high. Now you have to watch out for the daily range, right? You have to watch out. You don't want to buy in premium. You don't want to sell in discount. You only want to buy in premium after discount gets tapped. You only want to sell in discount after the premium gets tapped, right? So this guy is right where this got created. This 5 AM candle closed. It made a bearish candle, automatically hitting the daily range. So after that, you want to be careful. You do not want to buy in the wrong spot, sell in the wrong spot. So right when that get happens around, we should have been in a chart. Right when the 5 AM candle printed, I should have not been in a chart. But why do I say that? Because for a low time frame, there was a setup here, right? It was a deep OTE total soup right over here. This is the 5 AM, this is the 3 AM candle where the market was a candle right over here. The 3 AM time is a beautiful time for total soups, right? Eventually, there's we had the right model 1. We're looking for the direction block total soup long. which this get tapped. You can see that's why the market fucked around a lot. Guess what? Where'd it go? It's to a loss, right? Why? Daily range. If you go back to into your trading history and you check, if you just go simply mark out the daily ranges, and if you try, if you buy in premium or sell in discount, I mean if you buy in discount, sell in premium, your winner will naturally increase because daily ranges are a big problem, right? Daily ranges are a form of draw on liquidity. Keep that in mind. They're a form of draw on liquidity. They're a form of the market mechanics. So you would really want to be careful. There's nothing shit to play around with. So the lower time we didn't have execution. I was like, I'm not gonna execute a trade. So right around here is where I said I canceled the trade idea. I said it's worth a shot, meaning it's lower probability. I canceled that idea because of the daily range. Because around here I saw there was a daily range at a higher time frame. Then eventually I was like, I'm not gonna take the trade because we're buying premium. We cannot do that. And eventually I didn't buy it. And there was no setups. So what's the lesson of then? But wondering, well, why are you buying all over here to this low? And aren't you supposed to buy on this 4 CRT? No, because this is low price. But this range right over here, range high, range low, got the 21 o'clock range. That's 21 o'clock CRT. Still got to respect this market price up the range low, the range high, respect the range low, and still respect the range high. So we can go back all the way down, create some sort of S&T with the range low, double purge, and tap the resistance block, go up here or make equal lows and go up higher and do a true breakout. That's what could have happened. But let's set up the daily range, right? It took me a long time to take it. I do not want it to stutter, right? I literally just stuttered. Oh my goodness. So yeah, that was the lesson. The lesson of the day is I must pay attention to the higher time frame. I must pay attention to daily ranges because daily ranges are fucking important, right? Especially on a higher time frame. If I see that there's a daily range, but the market hasn't made a stable high yet, and this candle, it potentially can make a stable high, I have to pay attention to it. I have to be like, okay, if this candle closes to a bearish candle or bullish candle, it's gonna create a stable high. So I need to be careful. I do not want to buy in premium, right? Because you're gonna buy in discount, sell in premium, right, etc., etc. So my lesson of the day is to pay attention to the daily ranges. If the daily range is gonna get created, be very careful. Do not buy low. Do not sell up. Do not buy high. Do not sell low. Only buy low, sell high, right? Because in this case, you would have been selling over here. So right after 5 a.m. candle closed, it was obviously a sale candle over here, a classic 3 candle, CRT candle. And right when this candle closed, you could have just sold it because the daily range, there was a premium, so you want to sell off. So now if you go to a lower time frame, you could have sold off this candle right over here. This is where Romeo sold off. Romeo sold this this candle right over here. Lower time. If you go to Romeo's tweet, this is where he sold. Put a stop loss right on the 5 a.m. high. If you go to the 4-hour candle, let me go to a lower time frame and extend this real quick. That's where he sold. Right, he had his entry right there and right over there. If you're an advanced trader, if you like how Romeo himself said that if you want to be more advanced in this time frame alignment, it will be from 4 hour to 5 minute, from hourly to 1 minute, from daily to 15 minute, because there's much more candles in the lower time frame, right? So in a 15 minute time frame, looks very fucking ass. If you go to lower time frame, 5 minute is better to tell order flow. And what he means by 4 hour to 5 minute, hourly to 1 minute is about the market profiling, which is order flow, right? That's what it's trying to tell you, right? Because see, and all the point of the fucking 5 minute order flow, this is especially based on the CRT in the lower time frame. So let's just say I'm executing this 5 minute let's just say if I go back at a chart around here, I'm executing this 3 a.m. CRT, right? The midnight, the London twilight, what the fuck is called, tomorrow, right? So right when the market, this is the high that broke this low. So right, this is the last high that broke the low inside the high time of CRT candle, as well as the key level, and dig very deep in. Right, let's get closer above. Then eventually we're gonna expect higher prices. So eventually this is the low right over here. Market low to Francisco soup, and eventually this is the low that broke off the high. There's the low that broke above these highs. So now this is a, how do I say this? This is a intermediate term swing low. How come this is intermediate term swing low? Because this is the low that filled the fair value gap. So if the market goes below this low, which it did right around 9:25 a.m., which is why he sold right around here. If it goes below this candle, it's gonna determine some bearish price action. It's basically put one thing, well, in a fucking 5 minute. I thought you said the 4 hour. This is on your CRT trading, right? On your CRT. So this is not overall in the context. Overall in context, market is what? Rejecting lows, breaking highs, right? Rejecting lows, breaking highs. Overall, in the higher time is overall bullish, but the lower time frame for your entry pattern, for your entry model, this is where this is important. This is why he says 4 hour to 5 minute, hourly to 1 minute. A little quick sauce on that. You open up some people's eyes on that, but overall in general in order flow, it would be the 4 hour time frame, the daily time frame, overall market profiling. But for the entry model, if you're trading CRT inside the CRT, right? Inside the CRT is when you can use this 5 minute to 4 hour to 5 minute, hourly to 1 minute. This is when he uses it. This is when I find it being very most useful, because I've seen this happen, many times. Even me, I have been seeing it happen. So it makes much sense, right? It makes a lot of sense. This is the if you go back to the higher time frame, CRT high, CRT low, right? But to me, is overall, this is my CRT. To be honest, this is my actual CRT. Doesn't matter if that's my CRT or not. But what matters, it logically makes sense, right? This is the low. That's the intermediate term swing low. The closest one. Once it gets closer and below, then you can anticipate that bullish thesis being invalid, and you can eventually look for some bearish buys. But when it will do stop loss, get reduced to it, probably has a stop loss on a intermediate term high. What is this intermediate term high? Where's something that fills something? We're looking for a high to get filled. This candle right over here would not be this candle. How come would not be this specific candle right over here? Simply because there's no high here. It never filled the fair value gap. So we're looking for a candle that filled a order block. We traded to an order block breaker, etc., etc. This is the high right over here that we traded to this, proportion block, this order block, as well as this, what's so-called breaker. So his initial entry is highlighted to be like this, right? His initial entry. But he pushed it down over here simply because he tries to stop loss. That's what he does a lot. He does that shit to fuck around people with fucking mindset. I know that will fuck you, bro. But yeah, eventually targets down this low, which overall got met very easy. Pretty good 6.6 RR for him. And this is why he's a master. And that's a quick little sauce, because what I just said previously, the past couple of minutes, that's what you could use. If you're struggling with your entry models, that right there helps you. But overall, this is the market profile in the lower time frame. Market profile. And this is only used inside the CRT you're using to execute. Do not use this 5 minute time frame to probe the order flow for the day. You only use this for the execution pattern, right? For execution to validate when you should be trading. And the last rule is the last comment I have is that we must be a high time daily range. If this is a daily range getting created in a higher time frame, gonna fucking watch it fucking very carefully because I do not want to buy high, sell low. I only want to buy low, sell high. I want to buy deep retracement, sell deep retracement. I only want to buy in premium once discount gets tapped. After the discount gets tapped, I only want to sell in discount after the premium gets tapped. I only want to buy in discount on the same premium, nothing else. Thank you for watching. Make sure you guys like, comment, share. Join us down below, and I'll see you guys later. Alligator. Peace out.